Hello guys, good morning. If you can hear me, just drop it in the comment section. Let me know that you can hear me so that we can get started immediately. I want to be sure you can hear me. All right, thank you very much. So let's get started immediately. You're welcome back to our live session, guys. If you're absolutely new here, on this session is where we come and then we just analyze few assets in the market and see what exactly these assets are doing. And see exactly what these assets are doing for the week. So if you are new, just do not forget to subscribe to this YouTube channel. And if you are absolutely new to this channel, you can check the description also so that you can join our Telegram channel. That is where we drop a whole lot of information about synthetic indices. And if you've been a follower, you are really welcome. Okay, so let's get straight into it. I'm going to be analyzing one asset for myself, and I want you to drop the assets you want me to analyze in the comment section. I want you to drop it in the comments. I'm going to pick few assets from what you guys drop in the comments, the most mentioned. I'm going to pick from some of them and we're going to analyze it together. So let's get started. I'm going to be starting with volatility 25 index. And just like we do always, we always start from our higher time frame, which is the 24 hours time frame. So what is the 24 hours telling us? The first thing we want to look at is what is the current structure of the market. What is market currently doing? So our last break of structure for this asset is to the upside. So whatever sell we are going to currently be taking, it has to be a retracement until market takes this particular low. So until market takes this low, whatever sell we are taking is an absolute retracement, because you can see that this low was the last lower low created before we had a break of structure, and aside from that, it is a strong low. You can see we've always been talking about strong highs, strong lows, and the likes. So you can see that it is a strong low based on the fact that we've manipulated this low to the left hand side before we had the break of structure. So let's see what market is currently doing with the current movement. So we had our change of character to the downside here. A change of character, right? And since this is a change of character, the next thing we're going to be looking out for is to continue this retracement until market comes back into this 50%, comes back into this zone. I mean this zone. So we're still going to be looking out for a continuation of the sell for market to come back into the zone. So this is a change of character, but markets came back and still give us another change of character to the upside, telling us that we've exhausted this movement to the downside, this retracement to the downside. So we came back and had another change of character to the upside. Normally we are not supposed to break this particular high since we have a change of character here, but of course we cannot tell market what to do. Market is always right and we are just predicting. Okay, so let's see where market is currently reacting from. You can see that this high, market has not broken this high, right? Market has not taken this high. You can see that it is just with a sweep. So since market has not broken this high, what we are going to be expecting right now is market to break this low, because I cannot really tell if market is going to continue with this fair value gap. You can see that we had a fair value gap here, but since market has not broken this high, I cannot be so sure about this fair value gap. This fair value gap is not really valid yet because market has not given us a real break of structure to the upside. Until there is a real break of structure to the down or to the upside, that is when I would know that this particular fair value gap is very solid for market to use for a continuation of the buy. And we'll just assume that market came back to use our secondary point of interest. If you know our secondary point of interest, you can see that this area is where we have the secondary point of interest. So our secondary point of interest is around here, and market reacted at that particular zone. But despite market reacting, we've not had a real break of structure to the upside, right? There's no real break of structure to the upside, so automatically we cannot look for a way to continue to the upside, because sometimes when market does not break our external, which is our previous high, when market does not break it out, this low is weak. This low becomes weak if market does not break the previous high and then it comes back to at least 90%. It automatically makes this low weak. So we can't tell if this fair value gap is going to hold the buy. So what I'm going to do now is that I'm going to assume that this is a ranging market from here to here, because there is no real direction there. So I'm going to be very careful at the decision I am going to be making concerning this asset. If I'm going to be selling, I'm going to be putting just 50% risk because it is not so sure. And if I'm going to be buying, I'm going to be putting 50% risk. But let's see the one that has the higher confirmation for us to follow through. Of course, you're going to follow the one that has the higher confirmation, not because it is valid or not because it is right, but the one that follows your edge really much. So I'm going to just go to my 4 hours time frame, and then I'm going to see what market is doing on the 4 hours time frame. Our last break of structure where I can use for a continuation of the sell or the buy. I'm going to look at which one has the higher value. So this is what I am going to do. Let's see, what do we have here? We had a change of character for this 4 hours time frame, and when there is a change of character, we're expecting the market would come back. We're expecting the market is going to do some little comeback before movement. So that is a change of character for me. So where do I look for a possible sell continuation? My last change of character is to the downside. So where do I look for a possible sell continuation? I'm going to look for a possible sell continuation here. This is a fair value gap here. This is my fair value gap here. Check that. So this is what I am going to be expecting. I'm going to be expecting something like this to happen. Then a move to break this low. This is what I'm going to be currently expecting from the market. You can see that we've not had a comeback into our fair value gap. It is only this fair value gap that can invalidate our sell setup. Okay, it is only this fair value gap that can invalidate our sell setup, and market has not gotten there. So I'm just going to be looking for a continuation, a possible continuation to the downside. So this is going to be my possible continuation. I'm going to expect market to come back and take this high as liquidity, come back into this zone, and then we're going to continue to the downside to break back this low before we enter back into this fair value gap. And when market enters this fair value gap, if it doesn't give a confirmation for a buy setup, I'm definitely not going to be buying. But what I am currently seeing in the market is a possible sell continuation from here. A possible sell continuation from here. Market take this liquidity, then we continue the sell to the downside until we break this low and possibly come back into this area. And definitely you do not want to enter without confirmation. If you do not have a real confirmation strategy or pattern that you use, I have a lot of videos of confirmation on this YouTube channel. You can check them out. You can check them out and check the confirmation that suits your trading personality. I have a whole lot of confirmation videos on this YouTube channel. Just check them out and get a particular confirmation that works particularly for your own trading style. So this is what I am looking out for on Volatility 25. I'm going to analyze 3 more assets, and I'm going to be picking from the channel. I'm going to be picking from the comment section. So we have V100, V101S. We're not going to be analyzing BTC because this is basically for synthetic indices. And like I said in my Telegram channel, that we're going to be starting currency pairs and crypto analysis. We're going to start a currency pair and crypto live session analysis, and the links is going to be dropping on the Telegram channel. So let's just focus on synthetic indices. Okay, so I'm going to pick the most mentioned. I'm going to be picking the most mentioned in the group. So which one should I pick? Okay, so let's make analysis for volatility 100. Let's start with volatility 100. Let's start with volatility 100. All right, 24 hours time frame. Just like our culture, we are always starting from the 24 hours time frame. On volatility 100, it is very obvious that we've been trending to the downside. Basically, market has been trending to the downside. And where is our external? That is, where is the area where we are expecting market to come back to break eventually? It is this low. We are expecting market to come back and reach this low, and you can see that it is not yet raided. Market has not raided it, so we're going to look for a continuation. We would look for a continuation for that sell setup. So let's look at our last internal break of structure. This was the last internal break of structure. This is our last internal break of structure, and of course this is the high. We are not expecting market to come back to raid. If it is going to eventually come back to raid this low to the downside, we are not in any way expecting market to come back and break this high. So we're going to be working between this range. This is the range we are currently going to be working in between. That is, if we want to sell, that is the range we're going to be selling from. If we want to buy, that is the range we're going to be buying from. That is the range that is going to determine what we're going to be doing on this market. Okay, so let's look at 4 hours time frame and take a look at that particular range very well and see where we can use for a possible buy or sell continuation. So until market breaks this particular high, you definitely do not want to look for a buy continuation, except of course if you are a scalper and then you have a way of looking for your retracement continuation. Of course you can look for a buy continuation through that area, But if you're an intraday trader, I'm not going to advise you to look for a buy yet until market breaks that particular high. So how do we get where we're going to look for a continuation either to the downside or to the upside? So this is what we have here. A break of structure, of course. A break of structure to the downside. A break of structure to the downside. So where is our possible sell continuation? All of these are created inside. So if I'm going to be looking for a possible sell continuation area, this is where I'm going to be looking at. First, I'm going to be marking out this fair value gap. I'm going to be marking out this. This is a fair value gap. Then this is my fair value gap. I'm going to just expect market to use this eye and this eye as liquidity, but hold on, let's see this. This is a double top. This is a double top, right? That's a double top, but market is not going to seek a double top until it really wants to. So this is what we're going to be doing. We're going to have 2 points of interest marked out, and if we have 2 points of interest being marked out, it is giving you a signal that you definitely have to wait for a strong continuation and confirmation before you enter through the market. So this is what I am going to be looking out for on volatility 100. I'm just going to be looking for market to give me some retracement, enter into this zone, then give me a little confirmation. Then I'm going to look for a buy, or I'm going to wait for market to come back here. I'm going to wait for market to come back here. This is my first POI. Let me mark it out clearly. This is my first point of interest. Then this is my second point of interest. The reason I'm marking this area out as point of interest is because you can see that we have this eye being the strong eye. Market manipulated the previous eye to the left hand side, so of course we might come back and then use this area for continuation. Then my second point of interest is going to be here. This is where my second point of interest is going to be. So let's check what it looks like on 24 hours time frame. I don't just want to mark it, I want to look at how it looks like on 24 hours time frame. Alright, so this is it for me. Let me push this. Let me push this way. Let's check 2 hours time frame. Time frame. Alright, this eye is also a strong eye. Actually, it is a strong eye, but I'm not going to be marking those areas, not yet, until market gives a confirmation around there. So I'm just going to be marking this out as a strong eye. So what I'm going to be doing is I'm going to circle that eye. I'm going to put a circle on that eye. Let me just brush it. And that is to help me identify the fact that it is also a strong eye, so anything can happen within that zone. So if I get a confirmation, I'm no longer confused on what to look out for. I'm just going to identify this as a major eye. So this is what I am currently looking at on volatility 100. So let's pick 2 more assets, 2 more. So we're going to go for volatility 101S. 101S. So let's check 24 hours time frame, of course. So we have a break of structure to the downside. This is our last break. That's our last break of structure to the downside. And market came back and gave us change of character. This is a change of character. But remember, a change of character does not mean we want to change structure automatically. So currently, market has not changed structure for us, but we have a change of character. So we're going to follow the current move of the market to see what we are looking out for. So this is a change of character to the downside. A change of character to the downside. Then we had a break of structure. A break of structure to the downside. Then we have another break of structure here. A change of character here. Sorry, a break of structure. So what else are we looking out for? Let's go to our 4 hours time frame. Now before that, I actually noticed the fair value gap around there. So let me mark it out. Let me mark out that fair value gap before I proceed to my lower time frame. This is it. We have this. This is our fair value gap. And having that fair value gap, we also have this eye as a major. So whatever the market does, I'm not expecting it to go above this eye, this particular one here, because that's a major. So let me just mark that and put dashed. Okay, I'm not expecting it to go above that high. If market is going to come anywhere, it should be here. It should be something like this. Then maybe a continuation to the downside. But let's see what 4 hours is saying. Let's look at our 4 hours time frame and see where we can continue the movement. Alright, let's delete this, but we can see where I annotated. I marked those points out. So this is what I am currently looking at on volatility. 101S. A minute, please. Let me arrange this. So based on this move to the upside, first we have to break this high before we look out for market coming right on that high. We have to break this high. Once this high is broken, then market is expected to come back into this zone, possibly this interest candle. This is an interest candle here. This is an interest candle here. I'm expecting market to break this high. But if this high is not broken, I'm not expecting it here yet. So if this high is not broken and market comes back to break this low, this is a move to the upside. If market comes back to break this low without breaking this high, then we're going to look for our sell continuation. This is going to be a confirmation that we're going to continue to the sell side. If we have it broken fully with a body candle on 4 hours time frame, then I'm going to look out for market coming back to take liquidity then we're going to proceed. Our take profit is going to be on this low. Okay, but if market breaks this high, do not look for any sell continuation around there. Wait until market gets to this zone, to this fair value gap area, before you look for your sell continuation. But currently we are still inside the range. Market has not broken this high and it has not broken this low, so we can't say what market is going to do. And you can see that this high that was broken was just with a wick, so you cannot tell yourself to continue the buy movement from here. Assuming we had this high broken with a body candle, I would have looked out for a buy continuation for you guys around here, but it only took it out with a wick, so that is not a real break of structure for us. Until we have a real break of structure, that is when we can look out for a continuation to the upside or whatever. But then we've not had it broken with a body candle. But if market comes back to break this high, you can definitely look for your buy continuation till market comes back to this fair value gap, and you can look for a sell. Either ways, you're looking for two things. Either market comes back to break this low, then you look for a sell continuation, or market comes back to break this high and you look for a buy continuation. But you cannot make a decision right now unless if you are a scalper. Personally, I'm not a scalper, I'm an intraday trader, so sometimes I get so patient waiting for the market to display in my direction. That is one of my major edge. So I'm just going to patiently wait for what market is currently going to do here. Before the end of today, you're definitely going to see the area market wants to pull into, and then you can look for your continuation. And like I stated earlier, I would have looked for a buy setup if market had broken this high with a body candle, but we did not break it with a body candle, so we can't say this high might just be a sweep, and then we'll pull to the downside and we will continue the sell. So that is why I am being careful as regards making a particular decision around here. So let's pick our last asset for the day. Our last asset for the day, volatility 51s. Please guys, if I did not make analysis of what you dropped, I am really sorry. We're going to do it in the next session. So let's look at volatility 51s. Twenty-four hours time frame as usual. Alright, I'm looking for a big sell movement from an area here. So let's see. Change of character to the downside. Market came back to take this high as a liquidity. Market has taken this low. We've wicked it out. So 4 hours time frame. It is obvious that we have our last break of structure. So 4 hours time frame. Let's look at the internal break of structure. Alright, we have a break of structure to the downside. Break of structure to the downside. Another break to the downside. That's the internal structure. So we have something like this. So let's look for let's look at 2 hours for what market is currently doing. Alright. First, my higher time frame point of interest, which is 4 hours time frame. My higher time frame point of interest is here. But sometimes markets will not get there, so I'm going to look for possible areas where market can continue again. So this is my point of interest here. This is my POI around here. But remember, we still had a break of structure to the downside. So this is what I am currently looking at on 2 hours time frame. This is what I'm looking out for on 2 hours time frame. This fair value gap created here. Okay. This fair value gap created here is giving, and then we've had the low broken to the downside. So let's look at 30 minutes for a PO high if market is going to use that area. Okay. $15 minutes, 10 minutes. All these minutes are not clear enough, so I have to be sure of what we're marking out. You can see this was a range here. That's why I'm being skeptical. This is a range, a total range here. So, and sometimes market does not use range for continuation, especially synthetic indices. There's no visible area of POI, but this area would have been a good point of interest for us. Very good point of interest, but it's a range area, and there is definitely not, there is not major, we don't have major around here, so it's going to be very hard to mark out a point of interest from here. And when market breaks this zone, it could come back here, but that's not sure. A minute please. I'm trying to get what market is currently doing. That range is making it super difficult to mark out a POI. Let me check the 5 minutes time frame. There's no area we can use for continuation here. This is a double top. This is a major, this is a double top. This I didn't manipulate any high. This I did not. This I did not. That's a range over there. Okay. 1 hour time frame. Guys, what I'm going to be expecting on volatility 50. This area would have been a good area of PO high if it wasn't the range, but so there is a lot of range here, so I can't risk it. I can't mark this area out. It might still use it, but I can't risk it marking out as a point of interest. So I'm just going to stick to the clear one, the visible one here. But if you see a confirmation, something like this, let me give you a confirmation pattern. So when you see something like this, something like this. The market comes back to break this low. You can continue from here. But as an intraday trader, for me, it is not worth it. I would rather wait for what market will do around here, because of course this is the last break of structure inside this range. So I'm going to wait for what it will do here, or wait for it to create a clear zone for me. This would have been a perfect zone if it wasn't the range. Subscription away, it will not take your money away. Just click the like button. Okay, let's take one or two questions. Let's take one or two questions. If you have a question, drop it. Do you use fair value gap as your entry? Sometimes, not every time. Sometimes when I see that it works really well, I use it. And then fair value gap is not independent, right? It is also dependent on different things. So I just use it sometimes for entry confirmation. Do you understand? Do you wait for TP to tap, or you trail your TP? Now, if I place a particular TP, I often take my partials at 1:3. It is so consistent for me to take my partials at 1:3, because that is the most visible risk to reward for me, right? 1:3, and then I'm going to wait for the rest to hit TP. And of course, once I take my partials, the remaining one is going to be moved into break even. Alright guys, if we do not have any other question, thank you so much for joining. I'm going to see you in this live session on Saturday, same time, same channel. Have an amazing weekend ahead, guys. Okay, noticed that when there's a fair value gap on higher time frame, when I scale down to a lower time frame, I notice there is an OB or NAPDRA. It doesn't happen on every asset, but yes, you are correct. It sometimes happen, especially for people that are trading currency pairs. It happens a lot. And that does not simply mean that that is an area you can use for continuation, but it is still a good confirmation area. I mean, it is still something that is good for you to add to your confirmation. Do you understand? All right, guys. Bye.